amazing thing about buying a property is you could buy a property as little as 5% down payment, assuming you're buying the property for $500,000 or less.
Yep.
The price has gone up over the years, so obviously it's harder to find condos under $500,000. I know there still are. But let's just say you want to buy a property for $700,000. Well, a lot of people think, oh, it's over $500,000. I need to put 10%, and that's not true, Alex. It's kind of like a ladder. The first $500,000, you're still allowed to put that 5%. So it would be $25,000.
Okay.
You only need to put the difference between $500,000 and $700,000. Only that difference of $200,000, you need 10%. So that's another $20,000. So you add the $25,000 for the first 500, $20,000 for the between 500 and 7. You need $45,000 for down payment to buy a $700,000 condo in Toronto or anywhere in Canada.
Did I say 14,000? I know I did. That was because the 7. I was like thinking about that. Okay, so basically for $45,000, you can own a $700,000 condo.
Yes,
that's tons of condos. There's so many opportunities at that price point. I mean, even at the 500,000 price point. Like I remember I was working with my client. We saw a unit at Dundas and 427. It was a 1-bedroom condo, newly built. Parking, locker. It ended up selling for $475,000. I mean, if you check out my Instagram, I even have a video of this unit. So, this is good numbers. And I mean, you're putting that down, but you're buying a $700,000 asset.
Yeah, and as that $700,000 goes to say $800,000 over the years.
Yeah,
but you only put $45,000 down. You almost tripled your money.
Yeah.
So that also goes to show the safety of buying in real estate. How the banks are willing to leverage that much with you putting in down so little.
Our population continues to grow and boom. I mean, there's so much immigration and migration coming into Canada. People are moving into the GTA. There's so much demand. That's the fact that the bank will let you do something like this. I think it speaks to the strength of our real estate market.
Absolutely. And the banks are comfortable with that. The banks are not in the business of taking risk. And the fact that they're willing to lend on real estate with somebody putting as little as 5% down payment is a testimonial of how secure our real estate industry is and how safe it is to buy real estate.
Yeah.
Now, at top of down payment, closing cost, I always the banks like to keep it consistent across Canada. It doesn't matter where you buy, condo, freehold. The banks want to know you have money to close the purchase. So above and beyond the down payment, it's always safe to have 1.5% of the price that you're buying set aside for closing costs.
Okay.
Just so you want to be surprised at the lawyer's office. Oh, I need to come up with this extra money. We know in advance.
What are some examples of this? What goes into closing costs?
The number one is lawyers. You can't buy a property without a lawyer doing the registration, title, and signing all the documents for the bank, because the banks send the money directly to the lawyer. The lawyers deal with all the money going from one person to the other. The next one is land transfer tax. Now the best thing is if you're a first-time buyer, you do get a land transfer tax credit that's applicable right away.
Nice. So
you actually get to save money. If you're buying in Toronto, you're actually saving over $8,000. If you're buying outside Toronto, and Toronto is like that GTA, I call it the 416. Outside, Peel, Vaughan, Markham, Durham, that's outside. So again, you would save over $4,000 right away in land transfer tax credits.
Very nice. Very nice.
So those are the biggest two costs. But at the same time, just general moving cost. Banks want to know when you move into your home, you have money for utilities, pay the utilities right away, and you're not left with zero in your bank account or negative.
Makes sense. Okay, and why does this money should be in your account for 3 months? Why?
Oh, again, the banks have to deal with anti-money laundering, so they want to know it's your money. As long as you have your money for down payment could be your own savings, and it could be in multiple different accounts: RSPs, tax-free savings accounts, high interest savings accounts. There's also a new first homeowner savings account that was introduced this year. You're limited, this being the first year, with how much money you can put into it. But it's still for those looking to save for down the road and buy down the road is definitely a great savings tool. So the banks, they're going to look at your banking history, where the money came from. If you get money from family, which is very common nowadays, that's okay. It's just documentations we got to provide, because the banks have to deal with money laundering. And again, they want to know, again, it's your money, it's yours that you're putting down at risk to buy a property. So you have some of it on your own at least.
Sounds good.